Hi, this is Shankar and I welcome you all to the yet another edition of Bulls Carter. So, dividends versus growth. Which companies to choose for our investments? Whether the company is paying consistent dividends or the companies reinvesting profits focusing on growth and expansion. This is a $1,000,000 question. There are advantages and disadvantages relative to investing in stocks with dividends versus stocks without dividends. Listed companies have several choices when they make profits. Depending on their corporate goals and financial situations, they may choose to either reinvest the money to help grow the business or distribute the profits as dividends to the shareholders or even buy back the existing shares from the market. So why do companies first of all pay dividends? The dividend payments are often aligned with the company's annual results or profit declaration or other significant cash flows into a business. Argument favoring dividend payout states that paying dividends allows companies to share their profits with shareholders for their ongoing support and to incentivize them to continue holding the stocks for a longer term. Consistent dividends are often viewed by investors as a sign of a company's financial strength and indicates that the management has positive expectations around its future earning growth. Those seeking income from stocks are likely to choose companies that have a good dividend track record of attractive dividends to fund their lifestyle along with appreciation of the capital invested. Public sector enterprises, which are operated by government, tend to pay consistent dividends. However, they have limited capital appreciation. There are also professionally managed companies like Larsen & Toubro, Britannia, Bajaj Auto, Asian Paints, etc., which has paid consistent dividends. At the same time, the share prices has also appreciated significantly. So why companies do not pay dividends? The arguments against dividends is based on the belief that the companies which reinvest funds rather than paying it off as dividends will increase the value of the company over the long term. As a result, increase the market value of the stock by undertaking new projects, maybe acquiring new companies, buying some profitable assets or entering into new business areas or reinvest in financial assets or paying it off its debt. Companies like Tata Motors, Adani Green, Indigo Airlines, etc. does not pay consistent dividends. Rather, they doesn't have a previous track record of paying consistent dividends. But at the same time, they use their retained earnings to pay off their debts and expand their business operations. So the bottom line is that, as a rule, established companies are more likely to pay dividends as they might have grown enough or they might have reached a saturation point with maximum market share or they might not be having any immediate plans for acquisition or business expansion. However, companies in expansion or acquisition mode often need to reinvest their profits to grow their business over time rather than paying them off as dividends. There are no guarantee that any company will offer a dividend consistently. Those that have paid attractive dividends historically may not do so in future if they are planning for an immediate acquisition or other investments that requires large amounts of cash. Therefore, it is the sole discretion of the companies to pay the dividend or use it for business expansion. So, as an investor, what should be your choice for investments with regards to dividend companies or growth-oriented companies? It is not like dividend-paying companies are bad or growth-focused companies are good. Both have different roles to play in an investor's portfolio. It is the sole discretion of the investor to choose between these two categories of companies after consulting with their financial advisor based on their investment goals and requirements. So with this, let me conclude today's video and thanks for watching.
Hope I made the concept clear. As July month is considered as the tax filing season and the deadline falls on 31st July for this assessment year, We are coming out with a content that will help you a better understanding on the capital gains taxation.